Hi there, good afternoon. You're watching Market Fatafat on ET Now. I'm Snehi Shah, and with me as always is Ankita Saxena. This is a show where we'll be taking you through all the big buzzers in today's trade, tell you why all of these stocks are in the spotlight today, and also give you a technical check on some of these stocks when we'll be joined by a technical expert in just a bit. But before we do that, before we kickstart the show, let's take a look at what the markets are doing, and we continue to be lackluster totally where we were. No improvement coming in, a 1% cut on both Nifty and Sensex. Ankita.
Absolutely, Snehi. It's again a lackluster day of trades. In fact, we hit our, on the Nifty, we had a gap down opening and there was no recovery. One wave fall. We hit our 8-month low today. We slipped below the 22,600 levels today. Nifty Bank also is underperforming today with cuts of 364 points. Though Nifty Bank showed some recovery coming in, at least on Nifty Bank. Nonetheless, it's trading with heavy cuts of 400 odd points. But from the day's low, it is at least recovered 247 odd points on Nifty Bank. But the selling continues in broader markets. Mid caps are down almost 1%. Small caps are down 0.7%. Sectorally also, only the defensives are really holding the fort. If you look at FMCG, Pharma, they are in the green. Both are up 0.3%. Auto is also in the green. Now CLSA came out with a note on Indian Auto, and they do not believe that Tesla's entry will have any significant impact on Maruti Suzuki, Hyundai Motors, or even Tata Motors for that matter. And of course, they believe that the derating has already happened in Mahindra and Mahindra as far as it is all getting priced in. So as far as the auto pack is concerned, that won't get impacted. On the back of that, the auto pack is in focus today. M&M also had a note by Goldman Sachs where they're maintaining a buy. So M&M is trading with gains of 1.4%. So the auto pack is really holding out in the green because of these two notes. Besides that, a couple of other names that are buzzing away in trade. But for that, let's get started with the show.
Absolutely, time to kickstart this edition of Market Fatafat then. Now we're being joined by Sameet Chavan, Head Research Technical and Derivatives at Angel One on the technicals. And from our in-house research team, we have Ansh who's joining us. Good afternoon to both you gentlemen. Before we come to you, let me highlight the first group of stocks of the day. And it's not one, it's an entire basket of stocks. The likes of DLF, ONGC, Zomato on the back of a CLSA India strategy note coming in. They say that the Q3 earnings season was better than expected, but there have been notable EPS cuts and they remain a concern. The results of 30% of stocks exceeded their estimates, but a bigger 46% of these stocks fell short of their estimates. Despite not so bad Q3 results, the Nifty's FY26-27 consensus EPS was cut by 3% and 2% by CLSA, and their analysts have upgraded earnings for 18% of the stocks, but downgrades were seen for 63%. Now, if you take a look at the key earnings changes, top upgrades have come across DLF, Muthoot Finance, and ONGC. These stocks will come on your screen. Top downgrades have happened on Zomato. That stock is lower by 3% today. Bandhan Bank as well. Rating upgrades underperformed to hold Voltas, Tata Steel, Indian Oil, BPCL, and Oil India. Now, hold rating to underperform. That bump up has happened for Escorts as well as Dalmia Bharat, ACC, Astral, Keynes, Chola Finance, Muthoot Finance as well. And while lots of other upgrades coming in from on the flip side, if you take a look at downgrades from underperform to outperform, Bajaj Auto is the one that is taking it on the chin, and rating downgrades also Gujarat Petronet and Dr. Reddy's Laboratory. So these are a group of the bunch of stocks that CLSA is liking, as well as the ones that they're going to avoid for a bit. We've seen upgrades and downgrades both coming in, but on the back of that, Zomato is a stock that's not doing well at all. A 3% cut coming in on that front.
All right, so these are the stocks that are in focus today. But coming to you for the technical summit, you've picked up Coforge for us. Now, Coforge is holding out pretty well in today's trading session amid this market fall. But in the last, 1 month, it has been correcting a bit, but it has given good performance in the last 6 months. So from here on, where do you see this stock headed?
Yes, the entire IT space has undergone massive price correction in last couple of months' time. But the positive factor, the entire heavyweight IT space is extending its weakness. But this stock is bucking the trend. It has seen a sharp recovery from its 200-day simple moving average. So that's at least an encouraging sign, and probably we could see some consolidation with some hint of recovery in probably next couple of weeks' time. So as far as range is concerned, 7,400, 7,300 has become a very strong support, which coincides with today's low as well. And on the high side, if the recovery continues, then 8,000, 8,200, these are the next important levels to watch out for. So as of now, we are seeing some early signs of recovery. In case of this extent, 8,000, 8,200 can be retested in coming days.
Okay, let's see outlook on Coforge on the charts. Ansh, coming to you. Let's talk about the auto pack. It's doing very well, and one of the stocks from that group, M&M, is also holding up very smartly in today's trade. I believe it's in the back of a brokerage note, a positive one at that. Tell us what the note entails.
That's right. So in this falling market, this is a stock which is gaining with a gain of more than 1% from days low. The stock has recovered around 3%. So yes, there's a report from Jefferies and they have maintained a buy rating with a target price of 4,075 rupees. So they see the recent fall in M&M as a buying opportunity for investors. Also, they believe that its 20-time core FY26 estimated PE is attractive for 18% FY25 to FY27 estimated EPS CAGR. Also, they find that M&M is as a better investment case as compared to Maruti Suzuki and Hyundai. Also, the company enjoys stronger industry demand tailwinds and is gaining market share across tractor and SUV, which is positive for the company.
All right, that's M&M on the charts, holding out pretty well on the back of that buy call coming in by CLSA, but buy call coming in. But moving on then, to another stock that is in focus today, and that's SBI. SBI, Incred has downgraded SBI to hold, and it is actually hit its 52-week low in today's trading session, and it is on the back. A downgrade has come in to hold from an ad earlier, and the target price is now at 795 rupees from an earlier 1,100 rupees per share. Now they expect the ROA to moderate to 0.8% over FY26 and FY27 as the margins have moderated and the credit costs have now normalized for the bank. Now, the non-core income contributes marginally to the ROA, and its sustainability is questionable at this juncture. The recovery from the write-off pool is lower versus the SOE peers, and also the risk-reward ratio appears to be better for larger banks. And on the back of that, Incred has downgraded SBI to hold, and on the back of that, SBI is down and out almost 1% in trade.
Okay, let's move on from SBI. That stock's not doing well at all. Let's go across to Sameet for InfoEdge. Sameet, this is stock you've picked out. This stock is lower by 4.5% in today's trading session, and not just today. Last 6 months also it's been under slight pressure. However, last 1 year it's given a decent return. What's the outlook going ahead on the charts? Because this stock seems to be under pressure lately.
See, recently we saw, the stock consolidating around its 200-day simple moving average. So, the prices was stuck in a range of, 89 exponential moving average and 200-day simple moving average. But today we are seeing a decisive breakdown happening from this recent consolidation, and stock is now likely to retest sub 7,000 territory. So as far as its trend is concerned, clearly after consolidation, the stock has broken down from its support level, so any bounce back is likely to get sold into, wherein 75, 50, 7600 would act as a very strong resistance. And once the stock slides below 7,000, then we might see a sharp correction discount counter towards say 6,700, 65.
Do we have a... All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we continue.
Hi there, welcome back to Market Fatafat. Before we keep it going with more stocks, let's interact with Sanjay Bembalkar, the head of equities at Union Asset Management. And Sanjay, thanks so much for joining us on the show. And first of all, very good afternoon to you. We've heard about this fund of funds, the second one that you have launched. Tell us a little bit more about this. Talk to us a little bit more about the gold ETFs and also what kind of returns can we expect to see.
Pleasure to be here. Thank you. We have launched this gold ETF fund of fund with intention to provide a strategic diversification alternative to investors. We believe that in the current construct of geopolitical uncertainties, monetary policy changes, and tariff wars, we believe that gold is a significant asset class to have. We have seen gold historically has negative correlation with the efficiency asset classes like equities and debt. Gold being a scarcity asset, it has different drivers than what typically we see in the efficiency assets like equities and debt. And that's why we think that investors can use this asset class, particularly in current time frames. And also from long-term strategic allocation, we believe that it's a fantastic asset class to diversify in. And that was the rationale behind launching these funds.
Right. Hi Sanjay, this is Ankita also getting in. Good afternoon to you, Sanjay. Tell us, gold has done very well, last year, all through last year, and this year the way markets are performing, gold is a safe haven, but gold is also sitting at very record high levels. So from here on, how does if an investor wants to get into gold, for that margin of safety, is it the right time? And also, what is the upside that you see for this year?
Sure. So what we have analyzed is that in past 5 years, if you look at 3 years, gold has outperformed the Nifty as well as on the debt returns. We believe that when there is a geopolitical uncertainty, monetary policy changes, such kind of time frames are typically very good from the gold perspective. Indian rupees gold price benefits not only from US dollar gold price, but also benefits from USD INR changes. So currency volatility also adds or reduces from the gold returns, as the case may be. Currently, if you look at the US dollar appreciation and currency depreciation, it has gold in rupees terms has benefited from that move. We believe that considering the overall situation where central bankers have been significant buyers in gold in last 2 years, we believe that such kind of trend is likely to continue, and that would aid performance of gold over a foreseeable future as well.
Okay, also help us understand in the current market scenario, how much of an allocation in terms of percentage of the total portfolio should gold have in a retail investor's portfolio, and also what are the advantages of investing in an ETF compared to the gold metal itself?
No, that's a very good question. And we dealt with this question we also when we launched our multi-asset allocation strategy as well. There are a lot of research internationally available which indicate somewhere around 15 to 18% allocation to gold should be there. We believe that considering the current situation and India's situation in the global macroeconomic scenario, we believe that 15 to 25% allocation should be considered by the retail investors. And that's why even in our multi-asset allocation strategy, we have 22% allocation allocated to gold as such. We believe that owning gold, there are 2 or 3 routes to own gold. One is a physical metal, as you highlighted, or owning a paper gold through either gold ETF or gold ETF fund of funds. We believe that when we own a paper gold from the in gold ETF or gold ETF fund of fund perspective, there is no emotional attachment. And I have seen many people who buy physical gold, it becomes difficult to actually sell that gold once because there is emotional attachment, and also headache of purity, headache of storing the gold has to be taken by the individual investor. We believe that in such kind of circumstances, it is better to have a liquid portfolio through gold ETF or gold ETF fund of funds, and without any emotional attachment, we believe that that would be crucial from the investor's perspective.
Okay, Sanjay, on that note, we'll let you go. Thank you so much for joining us and explaining what this fund of funds is, and good luck on this fund going ahead as well. But on that note, let's keep it going with all the stocks that are in focus in today's trading session. The next one we wish to highlight now is Granules, because Granules India on Friday post-market hours said that it has acquired Switzerland-based CDMO firm Sen Chemical AG for CHF 20 million, which will translate to roughly 192 crore Indian rupees. Now, Sen develops and manufactures peptides and peptides-based applications for its global customers, providing contract research, development and manufacturing services, which is the CDMO space. Now, this acquisition is expected to be completed in the first half of this year, Granules India has said in a statement, and with this acquisition, they have now also successfully forayed into the CDMO segment. And that's the news flow on Granules India. That stock is holding up smartly amid a market that's largely falling, or 1.7% hike coming in on that stock.
All right, moving on from Granules to Interglobe Aviation. Ansh, you picked out Interglobe Aviation for us. It's a brokerage candidate note that has come out on Interglobe Aviation. Tell us the details of the note by Citi.
That's right. So Citi has come up with a report on the stock, and they have maintained a buy rating with a target price of 5,200. So we are seeing more around, I think, 15% from current level. Also, they believe that there's a pickup in overall air traffic demand and Indigo's strong market share, due to which they are seeing positivity in the stock. Also, they have said that there's significant improvement in PLF, which is capacity utilization, for quarter 4 or FY25, despite having a seasonally weak quarter. They've also mentioned that a part of this increase in overall demand could also be attributed to increase in traffic to major airports such as Uttar Pradesh to cater to this Mahakumbh. Also, they have said that a higher demand could manifest itself in better yield in Q4 FY25. So these are the reasons why the stock is in focus and is trading with a gain of around 1%.
Okay, so interglobe aviation also flying higher in today's trade. On that note, that's the last stock that we could talk about in this edition of Market Fatafat. We're completely timed out. We'll wrap it up on Market Fatafat. It's a goodbye from Ankita and me. Thanks so much for watching.